Right, time to talk property now with Property Apprentice. So the tax working group, the final report is, did you know there's a tax working group going on? It's due out today in 2 hours. In it, as we know, is a recommendation for it. Did you know there's a capital gains tax coming? Yeah, that means if we enacted this, we could pay as much as up to 33% on value increases of a second home, batch properties, the hairdressing business that you sell. Many other countries have these up and running already. So has it worked overseas to do what? What's the end result? One person who we love here at the AM show, she's pretty clued up on this whole property thing. Debbie Roberts from Property Apprentice joins us now. Debbie, good morning.
Good morning.
I won't be too hard on you today because I know you've probably popped a few Panadol this morning.
I did.
So we'll be nice and gentle. Overseas, does it work? Where do they have these things?
Yeah, so if the capital gains tax gets introduced into New Zealand at the marginal tax rate of 33%, that'll put us in one of the top capital gains tax brackets worldwide.
Aggressive, isn't it?
Yeah, so I mean Denmark's got 42%. That'd be horrendous. France is 34.4%, Finland's 33%, Ireland's 33%. You know, so there are a few that are higher than that, but the majority of them are
Labour's
lower.
socialist friends as well, you see. They like that Scandinavian thing. Did the sky fall in those countries? Ireland did.
No, I mean, all of those countries still have property cycles. They still have property booms and property busts or whatever you want to call it. You know, so I think one of the reasons that that the government was talking about introducing a capital gains tax, especially for property, was to help bring house prices down. And I just don't see that that's going to happen.
It's happening anyway without it. See this?
Well, exactly, yeah. And I saw that one of the chief economists from one of the main banks has talked about a 10% capital gains tax would reduce house prices by 10%. I don't see how he came up with that.
Well, they've only gone back 3, haven't they?
Yeah.
Haven't
But
they?
I think some of the side effects that could happen from a capital gains tax is that because the main home is excluded, I think people are going to want to buy bigger homes, you know, so that's called the mansion effect.
What if you have two main homes? I'm 6 months in one and 6 months in the other.
Yeah, well, that's going to be a tough one to figure. A capital gains tax is not a simple beast.
I think they're one of the most complex of beasts.
It is. And so one of the things that I was thinking of, if they wanted to target property, and clearly this capital gains tax is not just targeting property because it affects business as well as shares. If they wanted to target property, they've already got the Bright Line test in place. They could have just extended that.
It's 5 years, make it to 10.
Yeah,
It would take
exactly.
2 seconds to do.
Yeah,
John
and most property
Key,
investors wouldn't be affected by that anyway.
But there's also the idea of, I think that what they'll do in this review also is suggest a land tax or sort of a death tax or a wealth tax. But I think the land tax, very simple. Landowners pay 1% every year of the value of the land as a tax. I think John Key quite liked this from memory from the last tax working group. There's been a few. That's a really easy way around things. It's like a GST.
Yeah, but if it was tax on money that hasn't been received, that's going to be quite difficult.
That's right, because it's not a tax on profits. So what people need to realise here is that it's not a tax on profits. You'll still go ahead with your profits and pay your normal tax rates.
Was there any slump in house prices overseas when they, like immediately introduced the capital gains
Not
tax?
that I've been able to find. I mean, I could be wrong, but I haven't been able to see any evidence of a property slump following the introduction of the capital gains tax.
So there'll be no benefit to people like me who are wanting to get into the market. So it'll just,
No.
It
There's
just
so
seems crazy.
there are so many things that affect house prices.
Yeah.
This won't have an impact on
No,
them.
and I think the fact that that capital gains tax is going to affect shares, property and business, those are the 3 vehicles to create wealth. You know, those are the only 3 vehicles to create wealth. So given that it's going to affect all 3 of those, it's not going to put people off, you know, because I think one of the important things to remember is that even if they do introduce it at a 33%, that still means that you're going to get 67%
return.
You know,
Yeah. But
so I'd rather get 67% of something than 100% of nothing.
That's a good point, but I reckon the number to look for here is 15%, because so they'll recommend 33 today. There's no doubt about that. But if you look at Labour's policy history, go back in the last 10 years, they have pushed a 15% capital gains tax, 15% on everything effectively. Look at that sweet spot, and I reckon we should give them a chance to at least explain themselves.
Oh,
So
look,
our
and
duty
it's
to.
politics, isn't it?
Yep,
Because if they say 33%, 33%, and then they go, look, we're only going to introduce
Then you vote them
15%,
out.
everyone goes, oh, aren't they good?
Vote them out. But not only that, there'll be income tax cuts as a result.
Yeah.
And that for Labour is a big deal. Income tax cuts. So you actually might like the prescription, who knows? But it hasn't collapsed markets overseas, is what we know.
No, it hasn't.
Take your Panadols, enjoy the rest of the day.
Will do.
Recommend us to your friends. Debbie Roberts, Property Apprentice, knows a thing or two about property. Okay.